right, welcome back everyone to the 5ers live trading room, and I'm joined by Victor. Victor is back. How's it going, Victor?
I am doing fine. Thank you, Jonatan, for that introduction. It's great to be back. Yes, it's good to recharge, but coming back is also great. How have you been? How have you been while I was away?
Oh, I've been amazing. Well, I've been a bit sad, of course, because it's been lonely. It's been lonely here. I did get help yesterday from Alex, and we had Dirk on, and we've had Saul on as well. So I've been entertained, but I do, of course, miss the one and only, the masked trader, the Victor.
You
Guys,
are too kind.
all right, guys. So I want you guys to go into comment section, and I want you to answer this question. Do you think technical analysis is it possible to be profitable but only using technical analysis? I mean, well, look at the numbers. Look at the statistics. How many people that get into trading succeed? Like, what's the percentage of people actually succeeding in trading? We've all heard the numbers. 95% of people that try this out, they fail. Some estimates even say 97 or 98, right? And I think most of those numbers comes from the people that start, and then 1 year later, are they profitable, or are they still even in the game? And a huge number of people, a very big percentage of people are you know losing money, or have lost all their money in the first year. So the failure rate is very, very high. So do we think that is it even possible to be profitable using only technical analysis? So would be interesting to show you guys some the things that in the professional world of technical analysis. I want to show you guys some of the things that are being used as proof of this actually working. Now, of course, we all have our own proof of this. I mean, I have developed at least 2 technical trading systems where I have my own proof for that, through back testing and looking at historic price action and being profitable myself using this system. So I have the proof that I need that technical analysis works. But there's always going to be the discussion, because of the fact that it's such a high failure rate in this industry. People are naturally going to ask the question, can you even be profitable long term as a day trader? And I would, of course, say that the answer is yes. But I would argue that, well, first of all, it's very, very difficult. And I would argue that it's simpler, easier to be a swing trader for, I think, a lot of people out there. And I think maybe also one of the reasons why the failure rate is so high is because they're getting drawn into the idea that it's quick money, it's getting in and out of the market as quickly as possible, make some money there, and you want to be scalping, right? And this is also promoted by a lot of the brokerage firms out there, a lot of the exchanges out there, because obviously if you're trading a lot, if you're scalping a lot, then you'll pay more commissions. So you'll be a nice little good customer to the exchanges. But what I would argue is, I would say that I think the success rate in the industry would go up if people zoom out. If they focus more on the daily, then they focus on the 1 minute. Would you agree with that, Victor?
Certainly. Yeah, certainly. The thing is here, you are your biggest enemy. And in swing trading, because you have a low frequency, you have less opportunity to mess things up, right? Um, Compared to scalping, where you needing to be making a lot of decisions, there's a lot more chances for your emotion to sabotage the plan. And that's the reason why going into higher time frame, it gives you more time. There's less pressure, time pressure. I mean, there's more chances to reevaluate, and it just better. It goes better with handling, managing your emotions, everything, all those things that we know that are so detrimental for your trading.
Yeah, definitely. And I wanted to take a look at some, if you guys are interested in going, deeper into this question and actually looking for the proof yourself. There's a few books and a few research papers that have done extensive research on the subject of technical analysis. And I wanted to go through is show you guys some of those. So the first one of the first thing I wanted to show you is the book from, I believe this is a very old book. It's one of the I think so this is from a book called Technical Analysis of Stock Trends, and this is actually from 1948, and this is definitely considered one of the cornerstones in technical analysis literature, and it systematically it categorized. So this is one of the first time where someone systematically categorized lots of different chart patterns and discussed their edge and the implication for the future price movement. And the author here, Robert D. Edwards and John McKee, is providing you with very solid statistical evidence supporting the reliability of lots of different chart patterns. And I've gone through most of this, and from looking at all of these research and all of these studies, there's a few patterns out there that has shown a statistical significance over all the other patterns, and I'll talk about that later. But this is a very interesting work that shows that technical analysis, and this continues to be true now. Like, this book was written in 1948, and the same thing that they talk about now holds true today. Looking at more recent research, we'll see that the statistical advantages that some of these patterns have, they have pretty much been unchanged since writing this book. And I would argue that even going back to the times of Charles Dow, I think most of the things that we do see in the movements in the market has been unchanged. And that's why I always talk about focus on the fundamentals of technical analysis. And a lot of people say things like, well, this system doesn't work and that system works, and you should be trading, this system because this is the best system. And let me tell you something, all of those systems out there, they work. When they work because they're all the same thing, and that same thing is technical analysis. If the system is based on fundamental principles of technical analysis, then it works. Okay, it's simple as that. It's just you who might make it work or not work, but in theory it works. And then, of course, another book that I'm sure that most of you might already be familiar with, let me see if I can find a link to that one, is this one right here, which is kind of like the some people call it the Bible of technical analysis, and this is the Technical Analysis of the Financial Markets, a comprehensive guide to trading methods and applications, by John Murphy. I'm not sure if you've read this, but if you're interested in technical analysis, this is definitely one of the books that you want to read. He also gives a very provides very good statistical evidence that some patterns, like for example the head and shoulders and the double tops and the double bottom, have a significant statistical edge in the market. They had when he wrote this book, and they still have. Can't remember when this book was first written, but definitely consider checking that one out. Another one which is super interesting that I'm pretty sure that a lot of you haven't heard about this book, but it's called The Encyclopedia of Chart Patterns by Thomas N. Bulkovsky. Now, this is very interesting because what he did, and this research or this book is kind of lays the foundation for a lot of statistical evidence on a lot of different chart patterns. So this book right here is he looked at like thousands of different trading setups using these patterns, and he had a very good system of categorizing all the different patterns and all the different candlestick formations into ranking them from 1 to 23, and there's a few patterns that really stands out. And number one, for example, I'm going to show you after going through a couple of more examples. I'll talk about the number one, and I think most of you are going to be surprised on what the number one is. Basically, what number one is, it means that this is the most profitable trading pattern there is when you look at the stock market. And the thing is, most of this research is done on the stock market, but there has been other research done in the Forex market, not as extensive as this, but it confirms everything that they've shown in the stock market. So I feel like you don't need to do further research in the Forex market, because everything that they tested is confirmed. You have something called the...
You got me intrigued right there, Jonatan. I mean, everyone wants to know which pattern is that? Which one is the most profitable one? Isn't that like the question?
Can you guess? Can you guess?
Head and shoulder?
Maybe. Let's see. Why? If it's the head and shoulder, why do you think it's the head and shoulders?
Well, because it's since I trade that all the time, I think it's because if it is, because it gives you, it's kind of complex, right? And it shows the psychology of the market. There is a break of structure right in that pattern. And well, the Quasimoto is, the right shoulder is that the losing party trying to regain control and failing at it. And that's, to me, that's the basic of the psychology behind price action. And that's why I love it. I would argue that's I don't know, I haven't read the book, but I would argue that's the best pattern. But I'm very intrigued. You got my curiosity peaked right there.
Yeah, nice. Well, you're definitely onto something. So there's this open access, public online community for public research called the SSRN. I'm sure that a lot of you have heard about it, the Social Science Research Network. And on there, you can find a couple of old papers. One called The Evidence on the... Let me see, I did write this up, so let me see that I got it right. So the first one is the Evidence on the Profitability of Technical Analysis, and the next one is the Profitability of Technical Analysis. Those are two scientific research papers looking into this question, and they have found the same as in all the other books that I've showed you, and it shows that some of these patterns are highly profitable when traded in the right way, and arguably they've been profitable for about 100 years. Okay, so about
Wow.
100 years they've been profitable. Now, there's three different types of patterns that is, and now we're not talking about short-term patterns here. Some of the most profitable patterns when it comes to short-term trading is the flags and the pennants. Basically the bull flag, the bear flag, and the pennants, and they're very reliable when it breaks out. But the patterns that you can use on multiple time frames, and especially when looking at the medium time frame and the longer time frame and the higher time frame trend, that is one of them is actually the diamond pattern, which is a combination of a broadening pattern, could be a broadening wedge, and it's a symmetrical triangle. Now this I believe ranks at like 3 or 4 or something like that. And what a broadening pattern is basically where you have price action coming in, hitting resistance, and then it hits support, and then it goes like this. This is a broadening pattern when price just gets higher and lower, where you have a ascending trend line to the upside, and then you have a descending trend line to the downside. And what a diamond pattern is when a broadening pattern like this, which I believe this is a broadening wedge, or at least a symmetrical broadening pattern, when this turns into and starts moving like this, you then have a broadening pattern going into a symmetrical triangle. Okay, so it goes into a symmetrical triangle like this. And this is the diamond pattern, okay? And the diamond pattern is actually one of the most profitable patterns long term, but it's only really profitable and stands out and has edge in as a top pattern. Okay, and it looks like this. You come up and you begin the pattern right here, and then you break like that. As a top formation, as a top pattern, this is very, very reliable. The problem is that we don't see them very often. They're not very normal, and that's why a lot of people are not trading this pattern, because it doesn't come along very often. And so that's, I would, of the ones that I'm talking about, this one would probably rank around 3 or 4, something like that. And then after this, and in the comment, I want you guys to
This is getting exciting. I like the suspense. That's number 3. It's one of the best reversal pattern ever. Very infrequent, but very solid. Which one is the second, Jonatan? Which one is the second?
I want to know. I want to know in the comments. I want to know in the comment. What do you think? What do you think is the second one? Which is the second one? The funny thing is, like, when I showed the cup and handle, not really. It has
very popular as well.
The cup and handle has a statistical advantage, but it's like not more than most of the other patterns. I like the cup and handle though. I like it. So we've got head and shoulders, we got wedge. Let me see. I'm gonna give you a couple of more tries. It's okay. So okay, let me give you a hint.
Oh, I like this topic.
Okay, it's the first. Okay, listen. It's the first letter of the company you go to if trading does not work out.
If trading does not work out.
If trading does not work out, you take your resume and you go to McDonald's, which is the M, which is a double top. Okay, double top and double bottoms. Okay, so those are the second one. Now, why I like the double tops and the double bottoms is because they are everywhere. Okay, on the higher time frames, on the lower time frames, the double tops and double bottoms, they're just everywhere. Okay, very easy to identify, and it has built within it the idea of a market structure shift. Okay, so of course we have, in an uptrend like this, and this is why this is also very, very interesting. Now, that number 2, that's the top formation and the bottom formation, and number 1 is, and I think you can guess this one in the comments. So number 1 is the pattern that is mostly used to ridicule the profession of technical analysis. It's also the most commonly used trading pattern out there. Okay, so this is interesting.
Interesting, very interesting. Yes, indeed.
Let me know which one it is. If you ever had a shower, there is a chance that you've seen this name. If you ever had a shower, you might have seen this name. Trend line. I don't know what you're doing in your shower, but it's not a trend line. It's not a trend line. Are you guys seeing trend lines? Not trend line. Okay, let's see. Yes, the head and shoulders. That's right. The head and shoulders is one of the most commonly used trading patterns out there, and it's also by far the most profitable one. Now, what's funny is that everyone knows about the head and shoulders. Everyone have traded the head and shoulders. Everyone have identified the head and shoulders. But still, if it's one trading pattern that most people use in the market, then why are everyone, like 97% of people using that pattern, why are they not profitable? Why are they not profitable? While the most commonly traded pattern is the most profitable one, why is the success rate in the industry so low? Well, the answer to that is because trading is much more than technical analysis, and the head and shoulders pattern is just a beautiful example of that. But I want to talk about first the double top, which is going to be the same thing as the double bottom. But why is the double top ranking at number 2 in terms of reliability. When I say reliability, what they've measured is the frequency of it showing up in the market and its profitability and its failure rate. Now, the Head and Shoulders, when confirmed, has a failure rate of like, somewhere between 3 and 6%, which is like insane. Okay, statistically, long term, the Head and Shoulder pattern is super, super profitable. And let me paint out an uptrend here. Okay, so this is. Let me go to another. Actually, I want to have this chart open because I got this S&P long open, so I want to make sure that I see this one. If it breaks out, I'll very happy, man. But you have an uptrend here, and this is a very good looking uptrend. And just like the S&P 500 just now, we're testing these high. What if the S&P 500 comes down here? Well, that would not be very good, in my opinion, because then we have a daily M structure, a daily McDonald's structure, or a daily double top, which I would not be very interested in. So this is the double top, and why this is profitable is because it's applying the simple basic fundamentals of technical analysis. When the neckline of the M structure is broken, you have a clear break of trend. That's where the trend is ending. And the way you make money in trading is you trade with the trend. And when the trend is ending, you a lot of times start a new trend. Now, the similarities between the double top and the Head and Shoulders is obviously quite obvious. Because what if this is an uptrend and you come down and you test that support once again? Now, the power of the Head and Shoulders comes from the idea that you've already broken that support. You've already broken a support. Okay, so the trend is already giving you signs of a potential breakup structure. You're already below support. Now you're coming up and you're retesting that support. Okay, now you're already printing a possible downtrend, and then you come down to the next support below. Okay, and this is why the Head and Shoulders pattern is so incredibly powerful, because it already gives you the shift in structure. Look at this. You go from a ascending trend line to a descending trend line, and that descending trend line is already confirming before the pattern is confirming. Now, the importance here with the Head and Shoulders pattern is that the pattern, you cannot call this a Head and Shoulders pattern before it breaks down. So it's not a Head and Shoulders pattern before it breaks down. It's not confirmed until after the breakdown. So if you're going short here and you're trading this as a possible Head and Shoulders, or you're trading this as a Head and Shoulders because now you think it's going to break down, you're actually not trading Head and Shoulders. Looking at the statistics and the research, they've categorized the Head and Shoulders as a pattern once it breaks down. That's when you calculate the success rate. And looking at all the tests that they've done, thousands of different tests, they've seen that a break and retest of the neckline of the Head and Shoulders actually decreases the profitability of the setup. So if you really want to be trading this, you want to get in on the break lower, because that's, if you have a break and it continues lower, the profitability is much higher than if you have a break and retest. Now, of course, you have to do your own testing and all of that.
I'm sure everyone at home is now thinking, where should I, in such a case, where should my entry be? You said it would be at the break, right? The breakdown. And the next question would be, where do I put my stop? Do I put it on top of the right shoulder? Do I put it on top of the head? Where do I put it? I'm thinking, does the literature you just consulted, do they give any insights into anything that can help us answer that question?
Not the research that we've talked about today, but I can, of course, going through. I've just read also last week the section in the in CMT level 1 on how to trade the Head and Shoulders. So what they've done is they've looked at what where do you statistically, like where do you want to have your stop loss if you so they're looking at things like they have a benchmark, I believe, of like in the stock market, if the head and shoulders pattern break to the downside, they see the breakdown as successful if you hit a if the stock moves 5% down, 5% to the downside. And then they look at where do we want to have that stop loss to increase the chance that you hit 5% before hitting that stop loss. And most of the time it's going to be above the right shoulder. So if you enter on the break lower, now of course, if the pattern is confirmed on the breakdown, a very popular way of doing this is by having, first you want to understand what is a confirmed breakout, and there's a lot of people have their own systems for confirming a breakout. I would say that it's a candle close below, but a lot of times that will be too late. So you'll have a buffer, like maybe price moving a certain amount of pips lower that would confirm the breakout, depending on what price action looks like. Maybe you have wicks and things like that, but let's assume that you have a stop, a sell limit, or a sell stop, or a stop limit sell. Is it? I think it's a stop sell or stop market sell, or whatever the word for that order is. When you get automatic,
stop order.
Yeah, it's a stop order to enter the market below there, and then you want to have the stop loss here. So there's also a common misconception when it comes to the head and shoulders. And Alex is onto something here. And put the TP at 70% of height from the top to the neckline. Now, the common way of trading the head and shoulders is by putting the distance from the neckline to the top of the head, and then you double that. Okay, now Alex says 70%, which would be around here, which also makes sense. But that is like the most common way when you do research on the head and shoulders, that people would say that, okay, take this distance and double it. But let me think about this, guys. Think about this. Yeah, it's safer. Alex is definitely onto it. It's safer. But think about this. The reason why the head and shoulders pattern and the reason why the top patterns of profitability are the quite simple ones, and they're based on market structure and horizontal levels. Now, of course, you can have a head and shoulders that have a trend line as well, where the neckline is a trend line. But and actually, when the head and shoulders have an ascending neckline, the breakout is more profitable. And when the right shoulder is lower than the left shoulder, which is a bit asymmetrical, and we go into perhaps later the realm of Quasimoto pattern, but where it's slightly asymmetrical, it's more profitable. So if you have a neckline that looks like this, it's only going to slope a little bit. If it slopes like this, then it's not profitable at all. It only has to slope like a little bit. Perfectly would be if it's like 45 degrees, something like that. And then you have a move that looks like this. I have to increase that one a little bit. And when it looks like this, the breakout is usually, that's like the most profitable head and shoulders pattern. But again, it moves quite quickly, so there's less time to react because the right shoulder is usually quite small. But going back to the TP scenario, the head and shoulders pattern is based on market structure and horizontal levels. In this case, at least, market structure and horizontal levels. It works because it's breaking certain support levels, and it's respecting certain support levels. So when it breaks to the downside, price action is still going to respect certain support levels. So if you have a TP that says, okay, double this distance, so are you just going to ignore the support? You're going to ignore the thing that made this pattern profitable. Obviously, that makes no sense. The pattern is built on the price trading from level to level and breaking levels and going down to the next level. So obviously, the best way to profit using the head and shoulders pattern is the next support below, which is going to be right here. And the way you trade this is you're going to exit here. You're going to put the stop loss above the high. Now, of course, in this example, it's below 1R. But obviously, a lot of times you'll see that the support lower is more than 1R. And you can also, of course, also take actual profits. You can close 25% or 50% of the position and then move stops to entry, because remember, if you have a retest of the neckline, the profitability is going to decrease. Let me show you why that's the case. Because when you have the breakout, you hit that support, you come up and test that level, the reason why the profitability becomes lower is because this is now your FTA. Okay? And it's already been tested once. So while all of this holds true today, it has been true for up to 100 years, and it's most likely going to be true in the future. You still have to apply your own logic and your own testing to things like this. But what I wanted to show you here today is that I'm not saying that technical analysis works because I'm profitable. I wanted to show you that there's research that has been done over the course of many, not many hundreds of years, but tens.
Since the beginning of
years.
time.
Yes, that's the beginning of time. We've had, no, but it's so it's very, very, very interesting, and I want you guys to think about this. Think about this when you're on Twitter, when you're on YouTube, when you're out there on social media, and you see the next big thing in technical analysis, like, oh, buy my super pumped 3,000 trading system that's going to make you a millionaire because of this one thing right here. Okay. And I have my courses as well. I have my indicator, but I'm very, very open and transparent and honest with saying that it's based on the foundation of technical analysis. It's basically based on the break and retest in a trending market. It's simple as that. And then I've added a couple of indicators and adjusted some things that fits with my personality and my trading style. But at the very core, the reason why technical analysis works is because of, one, the psychology of trader, secondly, the law of supply and demand in freely traded markets, which looks like horizontal support and resistance most likely on a chart. And the psychology being fear and greed, basically. And then you have the law of supply and demand. It's very simple. And resistance shows up as a horizontal level, support shows up as a horizontal level. And if you can learn how to trade between these levels and identify trends, then you have all you need to be a profitable technical analysis.
Great stuff, Jonatan. I think if everyone, I think everyone does find this interesting, because the head and shoulder is so popular. I mean, we talk about it all the time. Everyone talks about it, and it's for a reason. The reason being that it gives you clear sign because you have clear references. You have a neckline, you have the head, and it's very clear to me when, let's say, when it fails. Right? It's when it takes out that head, it's no longer a head and shoulder. It's clear to me. There's no doubt about that. The same thing as the neckline. There's a clear place where the neckline is. And at least to me, and you can have different rules, but once you have a rule, it's clear to you when that rule is violated. So, and it's a break of structure. Right? What's a break of structure? It's a shift in market sentiment, in the perception of price. What is fair price? And other people will, because of the fundamentals of a trend, right? Higher highs and higher low, which is then broken to form that pattern. It's very clear to everyone that something has changed, even if they may not be able to realize that in time. Eventually they will see that, and by the time it is so obvious, it will just come down, and by then you should already be in it, of course. But it's such a lovely pattern, so simple base. It's very, very simple but very powerful.
It is, and I think that's also. I like to think of technical analysis as a language framework to understand, learn price action. Yeah, I mean that's exactly what it is.
Hmm.
We're the markets speak its own language, and that is price action. And we as technical analysts, our job is to analyze price action and to create a story. And that story is usually a trend. We're looking for trends, and when I say trend, I'm also gonna take um, you know a sideways trending market or trading market can also be, it's also part of a trend. So it's all about identifying the structures, identifying the trends, and looking for profitable opportunities.
I think technical analysis is the language of price action, right? The same way that math is the language of nature, right? A
Yeah,
phenomenon in nature, you can describe them with math, and that's the same thing with technical analysis
yeah,
to me.
definitely. So today, what news do we have? We have at 4 in about 1 hour and 20 minutes today. We have the CB consumer confidence. We have new home sales coming out of the US. It might show us it's going to show us the strength of the US economy. And then, of course, later at 8, we have the FOMC minutes. Now, that's going to be interesting. The FOMC minute, they don't have the press conference on the FOMC minutes today. No, the FOMC, the press conference comes at
It's
the
after these are of course the notes of the meeting they already had, but
right, yeah.
it gives us insight into the reasoning for the rate decision they already took.
I'm definitely going to be looking forward to the next press conference they're going to have. It's going to be very interesting to hear the comments from the Fed chair Powell with Trump coming in, but that's for later discussion. But at 8 tonight we have the FOMC minute. It's going to be very interesting to see how that potentially is going to move the markets. And then on Wednesday we have the core PCE. It's going to be very, very interesting to see the core PCE, because the Fed does really look at that number as something very important when it comes to inflation. So lots to talk about. We have Germany inflation rate as well, very, very important considering the ECB. And what we're seeing right now in the markets, we're seeing a divergence between the European Central Bank and the US, where the European Central Bank, they are pressured to keep rates low because we've had numbers coming last week that Europe is potentially entering a recession. France went below the threshold for recession. And of course, in that scenario, the ECB, they're more pressured to keep rates low to help the economy basically. While in the US, there's fear of potentially Trump being good for the US economy in a whole, but also potentially pushing inflation upwards, which puts a little bit more pressure on the Federal Reserve to be more hawkish. And for those of you who don't know, a lot of times when we talk about these news and macroeconomics, we use words like hawkish and dovish. And basically what hawkish means is, imagine a hawk flying high and a dove is running around on the pavement. Okay, dove is low, hawk is high. A Fed that is hawkish is looking to increase rates or keep rates high. A dovish Fed looks to keep rates low or lower rates. So with that in mind, now looking at that relationship where we have a weak European economy and a strong US economy, we can look at pairs like the Euro USD, where I think this is quite obvious. where you have a massive move to the downside. When Trump came, when it became obvious that Trump was winning the election, we had a daily candle to the downside of 255 pips. Okay, 255 pips daily candle on that news, and after that, the price of Euro USD just continued to plummet, right? And we have not really reclaimed lost support. We had a gap up here over the weekend, which I believe is because of the new US Treasury Secretary, which is supposed to be pro bonds, which means that it's going to be utilizing the bond market more, and potentially that is going to not affect the inflation as much. But that would also be slightly weak towards the dollar. But then today, Trump came out and says that he's going to do I believe, a blanket tariff on Mexico and Canada, putting 25% tariff on all imports, which is insane.
Mind-boggling.
Yeah, pretty insane. All right, so let's see. Here's a good comment. Can you guys get more advanced instead of doves and hogs? That's what traders learn on their first day. Well, guess what? We have a lot of traders in here who are new, and we try to keep it simple so that everyone can understand what we're actually talking about. And we want this to also be a gateway into the world of technical analysis and the world of trading. So some of these live streams are obviously going to be more advanced. Some are going to be more simple. Okay.
Yeah, if you really go to the to deeper stuff right away, you're probably gonna lose the interest of the majority of the viewers. So we have to cater to all of all the viewers of all levels.
Yeah. So okay. This is also a good comment. There's always good info for beginners, but not so much for developing. I think one of the reasons for this is the fact that you begin with the basics and then you kind of branch off into your own. Like that's at least what I've seen that a lot of traders are doing. They develop the basics, and then it's kind of like up to you to do the back testing and to put in the real work. Like at that point, it's difficult to. But I definitely understand what you're saying, because yeah, but I think it's when you had the fundamentals in play. Like I still trade with the foundationals, technicals, the basic of technical analysis. But for me, the real work is, in my journal, in my psychology work, in my, ability to coach myself and things like that, which is definitely something that we're going to be talking about in the future as well. But I wanted to talk about the scenario that we talked about with the correlation between the dollar currency index and the S&P 500 that I've started talking about in the beginning of the month when Trump got elected. And we do see that this is of course in 2024, so we have to go back to 2016. And that's the correlation between the dollar currency index and the this is a good one. Yeah. Now, which traders would you recommend to follow to learn from? Yeah, please do not say ICT. Well, yeah, I'm not going to say ICT. Okay, I'm not going to say ICT. Now, who do we recommend to follow? Well, I'd say follow some of the people that we got on here, and some of the people that we've interviewed on this channel, and we're going to have more people that we're going to be interviewing here as well. Yeah, so go through previous episodes as well. We do have a lot of experienced traders who we've interviewed here as well. Okay. Yeah. So I know that I've been doing most of the analysis here. I'm just going to go through the ID here that I have between this correlation, and then after that, I would love to hear your take, Victor, on a couple of the pairs out there.
Sure.
So at the bottom here, we have the correlation between the dollar currency index and the S&P 500, the dollar currency index being in blue and the S&P 500 being in red. And we do see that we have a positive correlation between these two. It doesn't happen very often, but it does happen. It did happen last time between the election dates and the inauguration for Donald Trump. And then as you can see here, after inauguration, that's where the lines basically start having that inverse correlation. Again, you can see the dollar currency index going to the downside and the S&P 500 going to the upside. And we are seeing the same correlation holding true right now at this very time. We are seeing the dollar currency index on average is in an uptrend, while the S&P 500 had a big drop to the downside. The dollar currency index had a big drop to the upside, and it recovered. But we saw a dip here on the dollar currency index with the U.S. Treasury Secretary being selected, Bennett, I believe it was. And so if we do see the dollar currency index continue higher, this correlation holds true. Now, the thing is, this correlation goes against every seasonality pattern out there. And I'm going to show you what I mean by that. Now, I'm still long the S&P 500, but I closed all my other positions because of the news over the weekend, and I want to confirm the follow through before getting into new positions. But what I wanted to talk about here is the seasonality pattern of Euro USD and the dollar. So looking at Euro USD here, we see that going back 24 years, we can see that Euro USD is bottoming out at the end of November. Actually, throughout the whole of November, and December is by far the most bullish month of the year. Okay, so that's Euro USD. Of course, if we go to the dollar currency index, you're going to see the same thing in reverse because it's the same thing. But of course, looking at dollar currency index, we can have 53 years as well, which at that point, Euro USD was obviously not part of that basket of currencies. But here we see that November was slightly bullish for the dollar currency index, and then December very, very bearish for the dollar currency index. Going back and looking at the S&P 500, we see that now, of course, S&P 500 is mostly bullish because it's designed to basically go up, and the equity markets are, growing. The economic strength of the equity market is continuously growing. So, of course, an index like this will have a lot of the month of the year will be bullish. And you see here that the year is ending quite strong, with December showing a strong push to the upside, basically. So the seasonality pattern in effect here shows us that the dollar currency index should be topping out around this time. Euro USD should be putting in a bottom around this time. Now, with that in mind, we move over to the screen again, and we look at the dollar currency index. Where is the dollar currency index trading at from a weekly perspective? We have broken out on the weekly. We have 3 days left of this candle. It could potentially be a weekly fake out. It looks like we're holding support here, though. So it looks like a proper breakout. And if the correlation between, let's call it the Trump pump, if the Trump pump is going to continue like it did in 2016, we're going to continue higher on the dollar currency index, which also means we're going to go lower on Euro USD. That's why I'm looking for confirmation to short Euro USD. The problem is the low of that wick happened on the 22nd of November, which might very well be the bottom that we've seen in the seasonality index, where Euro USD usually bottoms out around this time and then starts trading higher. So I believe that we have a very good opportunity here to confirm the seasonality pattern. And if we do see confirmation of the seasonality pattern, we have an obvious long on Euro USD. And I think every single one of you watching here needs to pay attention to this, because this could potentially be a swing trade long to hold for, till Christmas. So if you have a reclaim of this level like this, I'm going long on your USD and I'm not selling until the end of the year. If we, however, fail to hold this level, I am going short on your USD down to perhaps this level, down to the 0.618 at around 1.02. And I might even believe that we might even come down to parity, which is down here. That is a true possibility. But I think we'll have a big bounce around 1.02. So that's on Euro USD, and that's the overall idea I'm looking at on Euro USD. Also, another trade idea, if we see dollar strength coming in, if the dollar currency index is going to continue to break out, I will open a swing long on USD CHF based on this range pattern that we have right here, where we have right now reclaimed the range EQ. And I did take a couple of longs on this one where I entered here. I closed this one for a profit, but I'm looking to get in on this again. So I'm just looking for a confirmation of price breaking out and holding that support once again for a move up to the range highs. So this is a rather big move. We're talking about a 3 to 4% move to the upside on USD CHF in the Forex market. And I believe that this will probably play out until maybe Trump comes into office on inauguration date, which is January the 20th. So that's the overall idea we're playing around with now. Now, Victor, I would love for you to perhaps take a look at gold, because I see a possible pattern that you might like on perhaps the daily.
Let's look at gold then.
While you do that, I'm gonna get some. I'm gonna go get some coffee. I'll be right back.
Sure. So that is my chart right there. This is gold, of course. And let's look at gold. I'll be analyzing, of course, through the Quasimoto, looking at order blocks and Quasimotos, and trying to figure out what the market is trying to tell us. What is the intention? Basically, what that is the ultimate goal for technical analysts, right? You want to see what is the market trying to do, right, by those patterns, and at the degree it is succeeding at it, you participate in the market. So let's see. We start from the higher time frames. There isn't anything, at least not for me, to be doing, since there isn't any order blocks at play or any quasis in this higher time frame. So there isn't really anything to look at other than to appreciate that the market has been very, very bullish last couple of months, and actually many months clearly. Going to the weekly. All right, so there's a shift actually, there's two patterns at play. I will go into them, but there's a shift we got from this weekly order block this last week, right? We have this order block that was created and is now being retested. That is very powerful because it aligns with the higher time frame, with the structure, with the impulsiveness of the monthly time frame, which is to the upside. Of course, we all know that it's been very bullish. So you want to pay attention if you get a weekly order block being retested in the same direction, right? And that's what we have right now. We have an order block right there. There is, however, on the lower time frame, a reversal pattern at play, which we will be looking at it right here. If we go to the daily, right, these trades are ideas we had from before, and this is exactly what I trade all the time, which is the Quasimoto pattern. In this case, the Quasimoto pattern is this: we have an established uptrend, right? It breaks it, right? Breaks that neckline indicated by that red horizontal line right there. That's the neckline, and it comes back to retest some structure before it completes the pattern, right? It is on the higher time frame. We do see, as I mentioned, on the weekly, a bullish structure, which needs to be, you need to pay attention to, because of course it is it's a structure in line with the trend which we have had so far. But on the lower time frame, we have a reversal pattern, so we have a conflicting direction here. Which one do you listen to? Well, I would say I would trade both of them. It sounds contradictory, but in reality, it shouldn't have to be, right? So I trade both of them. I trade the short side on the lower time frames, and when it comes to those bullish structures on the higher time frame, I take them as well. And I try not to have an opinion. I just trade the pattern of both of them, and one of them, of course, is likely to pay off, and that's going to cover the cost of the other one not working out. So what we have is, on the weekly, of course, we have a structure. You could go, and you should go, to the lower time frames to find bullish entries in this area, which is quite wide, I know, but you do have some structures here on the daily that, although we don't have a quasi, we do have a bullish order block, which could give you a hint as to where price buyers are likely to come back to the market, and you can go further down in lower time frame to find your entry long from that structure, right? At the same time that I'm saying that, I indicated the quasi, which is this pattern making higher highs and higher lows, which is then broken, and the price typically comes to this is a reversal pattern, same as the head and shoulder. Actually, Quasimoto is a form of the head and shoulder. It's just not symmetrical, right? It's asymmetrical compared to the traditional head and shoulder, because this would be the head and shoulder, right? And the fact that it's not symmetrical, the neckline, it breaks the neckline, it goes much deeper, right? That's why they call them Quasimoto. So this idea is something that this scenario is something we talked about it before, right? Actually, we talked about it as soon as this candle was created a couple of days ago, because to me, it's very obvious that if price comes back into bullish mode, right? If the buyers are trying to regain the trend, that they're likely to, try to, the next test will be the structure we have that I have indicated here as the possible entry for a short, right? That's the structure that everyone is going to be looking for. Can they break that bearish structure? Because unless they can't break, if they can't break it, they cannot continue, of course, higher. And that's the idea of that trend, right? To continue high, continue breaking those bearish structures and breaking those highs. So that's going to be the task for price going forward. Let's see if we have what we do have here is an entry order block on the quasi. However, we haven't interacted with it yet. So this order block that was created yesterday, I would trade it, but not part of the quasi, right? So that would be the structure, the bearish structures that I would be taking a trade on, but it's not part of the quasi. So you have to you have to realize what kind of signal are we talking about when you identify the signal. Is it something to hold for today, a couple of days, or is it a bigger structure which can be, a longer swing trade, right? It's very crucial to know where do you stand with your signal, right? So to me, you have a bearish structure that is fresh, and I will take that trade. As price is going higher and interacts with this order block, and we have another one higher, which is also a possible entry order block for a short, that's where I would go to the lower time frames, the H4, to get some, a tighter entry for my targets, which will be at the lower end of this area, right? Either that bullish structure or all the way to that low, indicating a further breakdown of trend, which we don't have that information yet. But that's going to be, I believe, the opportunity for the traders for the coming days. Right. So we have a short, a possible short on this structure, since it is an order block. It is a place where the sellers came in and took over. However, on the bigger structure, I would be looking for a short. If the first one is not containing price, I should be looking at the possible entry order block on the daily, which is a bit higher. I actually like that better since it's much tighter, giving me much less signals it's going to give you. So either you're going to lose, if it's going to be broken, you're going to lose a couple of entries if you have a very tight stop as I do, but not many because it's quite tight, right? So, but it offers you the same benefits as the bigger ones, because of course the obvious targets to be taking are, at least the first targets on the daily timeframes, of course, is that order block below us, which is the same. Either you take the bigger or the tighter structure. So to me, that is that head and shoulder, that reversal pattern, very powerful, as Jonatan just explained, citing some books, some titles. It is one of the best, and that's why I trade them all day, every day. Quasis, to me, they are so powerful and very reliable. To me, very easy to read. Once you get the hang of it, it's simple, very simple. All right, so that is, so we have on the daily time frame, we have a bearish reversal. Although on the weekly, you have to take this in account. We have a bullish weekly order block being formed. So I would take both of them, right? I'll be looking for that long when price gets to a relevant area, but we cannot ignore the fact that we have a daily bearish structure that price will quite likely react to it, even if it doesn't mean that it's going to break down and continue lower, right? Even if that's not the case, you have to pay attention to that structure because it's very obvious. Everyone is looking at it, and we know it. When it's very obvious, we know other traders, the majority of other traders will also make their trading decision based on that pattern because it's visible for everyone. So on gold, I would say those are the opportunities coming ahead. The bigger bearish structure, wider, I mean, the fresher one, and the quasi, which is my preference, which has my preference for the short, and for the long, of course, that order block, which we left and haven't retested yet. So that's my take on gold, Jonatan.
All right.
There's someone here asking if I consider fair value gap. I don't, but I see them all the time, and I know they work. I have traded them I do trade them from time to time, but I try to keep things simple, and I try to have less moving parts as possible. You can, right? There are many indicators, many structures that work, that have some predictive value for price action, but it's an issue if you're going to use many. The more you use, the more complex you make it for yourself, the more likely you are to, make mistakes. So I try to keep it as simple as possible. Simple is usually better. That's why I don't use fair value gap, because I have enough with my quasis and my order blocks to interpret, because I use them on all time frames, right? So even though it's simple, because I use it top down, I will still have, as you can see on gold, we have conflicting structures, right? We have a weekly structure telling you that the buyers came in, but we have a reversal pattern. Which one do you listen to, right? So it's, even if you keep it simple, you're going to have these kind of situation where it's not clear. You have to wait for more data, for more price action data, so that you know which one is being broken, and that's the one you want. That's the sign. By that time, I'm already in. But I don't use fair value gaps for that reason, just to keep things simple. Let's say Al Kahaf says Quasimoto is much more profitable than Head and Shoulder. I I would agree with you, Alka have, but then again, I'm biased because that's what I trade all day, and of course that's the reason I chosen that pattern. So maybe we should ask someone else, but to me, I think yes, I think Quasimodo is the pattern to be trading, because it gives you everything you need. It gives you that break of structure, and it gives you um, that kite entry as I do. And I have my personal take or personal twist on it, of course, uh, because that's how you should trade. You should make things your own. But the quasi, yes, I agree. Quasimodo is to me the best pattern to be trading.
I have actually not seen the Quasimodo pattern in the research. So I do suspect that the Quasimodo pattern is actually a newer pattern that has not been around for too long. I do think that it's a variation of the head and shoulders pattern that I think it's I
The
think the profitability would be around the same with that one and the head and shoulders pattern. But I'll make a note here to
the
look that up.
yeah, the Quasimodo pattern is actually the head and shoulder where the neckline is sloping down.
Can you show like a picture
Sure,
perfect example of it so we can take a
sure.
look at it, and then
What we
we could potentially discuss the implication of that and see what the real difference is.
Right, that's the traditional head and shoulder where you have symmetry of the shoulders. Of course, in the real market, you don't see them as perfect as this, but this is the textbook example of a head and shoulder, and the neckline is the which is on a traditional head and shoulder is horizontal, right? Not all the time, but I mean that's the picture perfect textbook example we always get of a horizontal neckline. Of course, we have those variations which Jonathan just mentioned, where the neckline is sloping up, right? Meaning that it's like this. Or you have the other variation where the neckline is sloping down, right? And that's the Quasimoto, because I didn't use it this way, but this is what you get. You get a neckline that is being broken when the neckline is sloping down, right? Let me change the color, of course, of the. Let me change it so it's maybe a bit more visible, right? So you have the. There you go. Hopefully that's going to be more visible or clearer. When you have the neckline sloping down, I don't use that downward sloping neckline to identify the quasi. What I use is the horizontal line being broken, but it's basically the same. As you can see, this is a quasi to me, right? And that's the quasi, not just to me, but that is the quasi, where you have asymmetry in the neckline, where it doesn't come to the same level, doesn't form a horizontal neckline, but by breaking it, making a lower point and automatically making that downward sloping trend line. So, and that's a
That, but then
variation of
that's
the.
that then, but that's what I talked about. So then it is
Mhm.
it's a head and shoulders, but it's just a descending or accelerating trend line.
Yes.
And from what we've seen is the Quasimodo with a accelerating trend line. No. So the head and shoulders, I believe, with a descending trend line in an uptrend is profitable. And also,
Mhm.
if you have a so then that's the Quasimodo pattern. So
Yeah, it is.
they actually did research on that, and it's the Quasimodo pattern is more profitable than Head and Shoulders.
Actually, yeah, that's exactly what you mentioned. That the sloping down and sloping up are even more profitable variation of the horizontal neckline, and that's it, and that's why I trade them. I think by then perhaps just the name wasn't coined yet. It wasn't called the Quasimodo, but it always existed, of course.
Yeah. Okay, so I want to comment. So we got Ocean Gate. Now, obviously, OceanGate, you're new here, so first of all, I want to say welcome and thank you for joining our live stream here. Let me kind of introduce what we're doing right here. So this is obviously the 5ers live trading room, where we do trade live from time to time when there are signals in the markets. And I'm the type of trader that I trade. I have my own systems. I got one specific main system, and I got two different systems, and depending on the overall market conditions, I can sometimes day trade. Sometimes I feel like it's going on a live stream and I want to do a scalping session or a day trading session where I try to get, scalp to lower time frames. In the current market situation that we are in right now, I am applying some fundamental analysis to my trading and try to get a fundamental bias, because I do believe that right now we are in a market scenario where the Forex market is heavily directional and very dependent on the macro and geopolitical scenarios, especially with Trump and the divergence between the central bank in the US and Europe. So I am trying to position myself for the end of the year and potentially also the beginning of the year, because I see a very clear pattern playing out for the next few months. When I don't see any clear geopolitical or macroeconomic pattern going on, I tend to be more of a day trader or swing trader. And in that point, I do trade more often, and you'll see more trades taken live during this live trading room. Last week, I took 6 trades last week. This week I've closed all of those trades and I haven't taken a single more trade. So it's all about the market. It's all about the market. We let the market decide if we're trading or not. Tomorrow we're gonna have Saul on here, which is the CEO of the company, and he's scalping. And from him, you're gonna see some live trading, and I'm gonna try to jump in with him and get a couple of live trades in as well. But what we try to focus on here is a good mix of live trading and high level technical analysis. And high level technical analysis, what I mean by that is professional quality analysis on the bigger picture of the Forex market. Basically, that's the overall mix that we're trying to get here.
While you're explaining how our live stream works, I've been scouring the market to offer some opportunities to our viewers. Let's see, there is a quasi pattern right here, and if I may, I will show you guys in real time what it looks like and how to trade it, or I trade them. First of all, on the daily time frame, we do have a bullish order block being formed. So it makes sense to go to the lower time frames and find a reversal pattern, right? That's this move. This basically is these lines are depicting the price action, right? The direction of each day, and this is the low of today that moved down. That is a retest in my book of that daily order block, and it makes sense to go to the lower time frames to find that entry, refine that entry. But if we look to the there is a daily order block, yes, but what I want to show you guys is the following. We have if we let go of this order block, the daily for a little bit, we do have a on the flip side, we do have a bearish order block that was formed before, right? We had an immediate retest and then moved away, and this is the actual retest, not the immediate retest. And what you expect with order blocks being retested, that price will reverse from them, right? They will be will bounce. Price will let me explain this for everyone who may not be familiar with how this is usually traded. Let me change the opacity. Let's say you have an order block which is an engulfing or an outside bar, and let me get let's assume that is and this is basically what we have here. We have an engulfing, right? Let me change this to the correct color, of course, right? Imagine you have an engulfing, you have a candlestick combination where the bearish one, the body engulfs the previous green candle, what you want to be doing is, as price is coming back, you want to be looking for that short, which is this area, right? All the way to the top, right? To me, that's the very structure. That's where the sellers took control. That's where they're likely going to come back to the market to sell the market. So this is the basic idea of trading a fresh order block. Let me make this a little lighter, maybe too light, but you get the point. So, and this is, we can see this on the current price action, right? This idea right here, we can see that on.
Yeah, that's all good. But is it a buy or sell? Like, I love this comment. It's like, comes in, it's like, hello, buy or sell. Yeah.
That's that.
Do both.
That's,
You just hedge. Just do both. Open both, long and short.
it indicates one of the characteristics of many traders: impatience, right? You have to wait for the market. You have to read it, and it's not just coming in and saying, let's buy or sell it. But let's say, so we have a very structure, right? That's the basis of the following setup. We have a bearish structures on the H4, which is fresh. We go to the lower time frames on the H2. We didn't see anything. There's no order block here. Actually, there is one now that wasn't present when I was considering this, which is this outside bar. This beauty of that makes this structure even better. This setup even better. So we have H4, H2, and H1. I was waiting for H1 to close while I was doing that analysis on gold, and it did close as an engulfing on the H1, right? Which is this one, forming this order block. Very simple, nothing fancy, nothing out of the ordinary. A regular order block that was formed. Once that is formed, to me, it tells me that we have the H4, right, indicating selling pressure coming in. The H1, and we just saw the H2 as well, are telling us the same story by forming that outside bar. And then I go to the lower time frame, right? If this is going to be, if the sellers are coming in, where do I want to be? Where do I want to be selling this? And the area of overlap is between these two yellow lines, this one and between that one. And if I go to the lower time frame, let's say to the 5 minute, you can use any time frame. You can use the 10, the 15, the 5. Of course, you will have different signals at different time, but you're free to use any time frame. And you look at the let's see, we have here the established uptrend. That's that's going to be the left shoulder, the neckline. It breaks it, right, and it goes even lower. And now we have that quasi pattern at play, right? Where is price likely to go if it is going to reverse, right? We don't know that yet. Quasimoto is not 100%, doesn't guarantee you that price will reverse. But if price, yeah, it's a conditional argument. If price is going to reverse, where is it likely to bounce off at? And the answer is these two structure, at least in this time frame. The answer is either the order block on the 5 minute. That's why I call it an entry order block, or the other one, which is higher. So your job, if you're trading the quasi, is waiting for price to get and interact with these order block, these structures. Either I'm not a proponent to go blind at it, just as soon as it interacts, short it. No, I would want to see price tell me with either another time frame or some structure or some patterns being formed there, telling me that it is rejecting this order block, right? So it is bouncing off of that order block, and I would be taking that short if that were to happen. Of course, a short is the other way, best one. And I'll put my target, my stop, based on price action, but in any case above that order block, entry order block, and I'll be targeting at least that low. That's going to be that's a very nice setup. And if it fails, but does give me a signal again, I will take it again any time of the day. That's how I trade. And as you can see, it gives you a very nice risk reward, which compensates for losing one or two in the process. So that's the That's how I trade the quasi right there. That's a beauty of a quasi. Doesn't mean it's going to work, but if it does, this would be in my opinion, the best way to grab the bull by its horn in this case.
Right. Okay. So guys, I'm gonna give you a question. So I did say this week we're not gonna have any giveaways because of the Black Friday deal that we got. So instead of the giveaway, every account that you buy, you get into a raffle. But if you can answer this question correctly within 2 minutes, we'll put out the giveaway. Okay, so I talked about patterns earlier in the beginning of the live stream. Which was the first pattern I talked about? The number 3 on the list, the third most profitable one. 2 minutes from now, if you have the right correct answer, then I'll be setting up the giveaway and send out the secret code. Okay. Yeah, Alex got it. That was quick. Diamond. That was a quick one.
Someone is paying attention. Yeah, someone's paying attention.
I love that. Good stuff.
Yeah.
Good stuff. Yeah, I'll be setting that one. Up.
We should do more of those questions. For the audience, make them pay attention to every word, because it's so much fun when you make a game out of it.
Yeah, now everyone's running diamond probably because they think they'll get something if they do. But we already it's confirmed it's the diamond, so you can start writing diamond now. Thank you. Okay, so I'm gonna be setting that one up. Right, how do we enter? Let's see. Code. What's the secret code? Yes, I'll be adding this to the. Why should I purchase a new account if I have one that's working? We're not forcing you to buy one. You don't have to. If you want to buy an account, then you're free to do so.
Yeah. Well, the reason is just to increase your capital under management. That's the reason.
Of course.
That's the goal of should be the goal of every trader. Once you have a system, once you have attained consistency, your goal is to just increase the capital. Increase the capital because, of course, that's going to give you more profit. Simple as that.
Yeah, and also, you're. We're increasing the account limit, so you can. We had 3 account limit now. During this week, it's going to be 4. So if you have at your account limit, then we'll be adding that. Okay, let's. I'm going to be adding the giveaway link to the comments section.
Okay.
And with the secret code and everything. That should be it. Because I'm putting that as a pinned comment in the comment section. So you go to YouTube comment section and you have the giveaway link and the secret code and everything like that. And then around the top of the hour, we will draw a winner on that one.
Nice.
So what are we looking at? Let's see.
I'm further breaking down the same setup for different time frames. I've done this. I've done the backtesting a lot of times, and the data suggests that it's profitable, and it's not only profitable in just one time frame. So what I do is I trade them on multiple time frames. So the entries, I have entries on the 5 minute, the 3 minute, the 2 minute, the 1 minute, and you can think of as many as you want, because they're basically trying to catch the same movement just through a different lens, right? A different time frame. So what I typically do is I look for entries that are between those 2 lines on various time frames, and I will be taking all of them that in their respective time frames, right? So for a 5 minute entry order block, I'll need a 5-minute signal. What that signal is of course personal, but you can figure it out by trying different things, and that could be the signal, right? Your confirmation that price is actually respecting or trying to reverse from that structure, but it needs to be at the same time frame. So a 5-minute entry order block needs a 5-minute signal, and the 3-minute the same way, right? 3-minute signal for a 3-minute entry order block logic at play. Nothing special here, but that's how I approach the market. And so I'm very interested in this overlapping of different time frames, all of them the market telling us the same thing on different time frames, on the lower time frames. So I'm going to be very interested in taking a short from this area if price gives me that entry signal. That's EU, of course. You're muted.
Yeah, I was going to show something, but I was reading that comment from Alex, and then I completely forgot what I was going to do. I'm sure it was something very, very interesting. It was very, very interesting. Well, that sucks. I do have something that I want to show you guys, and that is where is it? Okay. Were you done, by the way, with your analysis?
Yes, I was.
Okay.
I've actually, yes, I was. The 5-minute is usually what I do, what I stop at, because it's not about giving signals, right? We're not here for giving signals. We're just giving to give you a structured way, an example of a structured way how to approach the market, and you, the viewer, should take that, make it their own, back-tested, validated, and build a system with or without those examples or those elements that we use. But I thought, since you were doing doing that giveaway procedure, that I would just expand on those possibilities.
Definitely. No, that's great. And so I wanted to show you GBP CAD here, and this is on the daily now. We did short this last week, did close it for quite good profit here. But what I wanted to show you here is moving averages. Okay, moving averages are a great way to look at trends. So you look at this, and it for me, it's quite clear what the trend is. But when putting on moving averages, now, of course, moving averages is just like, for example, the 20 simple day moving averages. You look at the last 20 days and you look at the average price those 20 days, and that's the moving average, right? So it gives you a very clear sign of what the trend is and what the trend has been. If I'm adding the 20 and 50 EMA right here, what we see is a trend goes up here. The trend goes up, and then now we've been trading below the 20 EMA in the daily and the 50 EMA on a daily, trading down here for a time period longer than from where the trend began, basically. And if we look at the market structure here, we can see that we broke below these lows, we broke below this major support right now, and we're now retesting that support right now. So we're retesting the level that we broke below. Are you looking for to short on Euro USD? He really wants an answer to this question. Maybe it depends on what the price action tells us to do, basically. I am maybe shorting EU, I may be going long EU. I'm just waiting for confirmation on that. And then we have FOMC tonight, which might actually be the catalyst that I need. But looking at GBP CAD here, what we see is if we put the fib on from this high to that low, we see that we're testing the reload zone right here, and we are not closing the daily candle above, and we're also retesting a major resistance area right here. Now, I would love to be able to get in on a trade here. Now, looking at the 4-hour, however, we do see that we have a potential shift in structure. We can clearly see that we do have a trend line going first. We have the trend line going like that, and then it's accelerating to the downside. So we have the trend line going like this, right? and we're now breaking out of this trend line here, and we're potentially entering a bullish phase. But if we have a strong 4-hour bearish candle that might close down here, I actually see that as a confirmation of my short, and I would then short this with a stop above this area, because I do think right now that the pound is weak. Dollar, the UK currency, the pound is weak, and I'm just looking for confirmation. Now, of course, this is a short against the Canadian dollar, and we know that the news came out that Trump is going to put a blanket tariff on importing goods from Canada, which of course is going to have a huge effect on USD CAD, but it might also, of course, affect CAD versus other currencies as well. So it's important to wait for confirmation. If you do get confirmation on this, though, I do think that we're going lower. And how low? Well, it depends, but we have been trading in this uptrend for a very long time. Looking at the weekly, we might even go as far down as to these levels down here if we have a proper breakdown. Of course, we have that level as well, so that's going to be if I have a good risk to reward, and if I'm able to build this position over time, and I'm able to scale into this position and actually add to the winner, and it shows that I have a good profit on that first level, I'm definitely going to exit fully at that level. But I will also be potentially looking at exiting parts of that position here, and then wait for that break lower. And the way that I would do this is, first we have, perhaps I'll show you, and hopefully I'll be able to show you this live if it gets activated as well. But the way I would do this is, if we have, that's a gap right there. That's a weekend gap. That's from this weekend. That's, I believe it was, yeah. So if we have confirmation here, we'll enter position here. That would be my stop loss. If price moves like this, I will enter a new position here, and I will move stops here. I will remove stops. I will remove risk from the first trade. I will take that risk and I will put it on the next trade, meaning that the first position will be a break even. The second one will have the same risk as the first one, but if we hit TP, I'll have around double the profit. And then if we break down, maybe something like this, and a breakdown, I will add this position. I will move stops on the first position and the second position here, and the trade I'm taking here will have the stop loss here. So I'll be making money on the first and second positions while losing money on the first position. And that's how you add to winning trades, which means that if all of these three positions hit TP, you'll make around 3 times as much as you would if you only had that trade open. So when I'm swing trading, and now this is a swing trade based on weekly and daily levels, I know that the move is going to take several days or maybe even several weeks, so I have a lot of time to scale into the position. If I'm day trading and I'm only taking a trade maybe from this level to this level, I don't have the time that's necessary to scale into the position. So in that case, I'm going to go in with full risk and exit fully. But at that point, the risk to reward is going to be much smaller. Okay, I might be looking at a negative risk to reward if I'm looking to day trade, because I know that time is my biggest enemy. The longer I stay in the position, the bigger the chance that I'll get stopped out or lose money. So that's what I'm looking at here. It's going to be very interesting to see what GBP CAD is going to do in terms of the proposed tariffs and all of that. Let's look at GBP USD. So this is a trade, the previous trade that we took at GBP USD. I did not expect the pound to break down like this. Here we have a break of structure. You have a uptrend here, and then you break this low, have a retest of that level, and I went short here down to the 0.61 head, and I did not expect the pound to just continue. Like it didn't find any type of support here. It just went straight down. This looks incredibly weak right now. Looking at the weekly, the thing here is I don't really want to short this, but if we see confirmation of of a move to the downside, I mean, we could have a, we could even come down. And if you go out to looking at the monthly, we have a few levels of interest here. First going to be that one. We have that one. And then we're going to have this area. So going back to the daily, if we break down here, if we break this support, we might want to short GBP USD down to these levels. And the way we do that is we look at the 4-hour trend. Now look at the 4-hour trend, we have a double bottom. Now, when I'm talking about this, I'm viewing the gap as being filled. So I'm visualizing myself the gap as actual price action. So what I'm seeing is this. So we have a possible double bottom on the 4-hour on GBP USD. If we add a resistance right here at the trend line, at the neckline of that double bottom, we also see that it's confluent with that previous level. So reclaiming this level is a very clear sign of strength. And then if we flip that around, losing this level is a very clear sign of weakness. So the trade then becomes this: stops above the neckline, TP1, and then TP2. Again, down to this level. Now we're looking at, of course, a like almost 3% move on the Forex market, which is just insane. But looking at the risk to reward of this trade, it's a 2.34. But then if we assume that price is going to go like this, we break here, I enter a new position on that breakdown, move stops the entry on the first one, and now the second position becomes a 4.5 R trade. So now we have 2.4 plus 4.5, which is way bigger, right? So confirming small risk to reward and then adding to the position is when we can add more risk, when we have that momentum coming. So yeah, that's yeah. And this is how I made like quite a lot of money on the Trump trade. Like when you had that Euro USD short, I managed to get that was, I mean, we can go back and we can look at that move as just one of my biggest trades. One of my biggest trades in the Forex market. I went in on that bearish engulfing candle. I had my stops above here, and we sold the position around this area, which is, maybe not very impressive. It's 2.7, but remember, we scaled into this. But if you look at the actual pip movement, this was a 355 pip move to the downside. So around 350 pips. And
Wow.
if you're able to catch those moves and you're able to scale into the position, I believe I had in total 8 different positions on this one. I think on the whole account, I began risking. I began risking 0.05 risk on this, like 0.05% of the account, but it turned out to be almost a 1% winner on the account.
That's awesome.
I mean,
that's the way to do it. That's the way to do it. The reading market and allocating risk as market is confirming, the setup, giving you more entries. That's the way to do it.
Yeah, and it's only really possible. And I know you're gonna take a break, so we'll you take that break, and then we'll be back.
I'll be right back.
Yeah, sure. So when we're talking about scaling into positions, I think as swing traders, it's what happened with the layout. That looks not very good. Look at that. Is that better? Nah. But make that window a bit bigger. But yeah, so when you're scaling into positions like that and you're adding to your winners, it's something that is it's not easy, but it's definitely more. It's easier done with swing trading, and it's a quite difficult thing to do with day trading. Let me just adjust my camera here a little bit. That's better. Let me know, guys, if you have anything you want to EU is currently on reversal phase, so it is better to look for longs. Well, okay, let's. I mean, if I'm gonna be honest, it's probably. Yeah, I mean, looking at the seasonality pattern here, we do see that EU is traditionally being putting in a bottom around this time. It has a quite strong significance in doing that. But one thing we have to remember is, why don't we go to 2016? We look at, sure, the RSS slingshot indicator. It's my my own indicator. That's this one right here, giving you all the signals and the EMAs. Obviously, that's my indicator for my community that I'm running, which is not part of the 5ers. And of course, out of respect for the 5ers, I'm not going to be shilling that on this this live stream. But I might, I do use it quite a lot in my trading. But just to simply put, it's the moving average that you see on here is the 20 to 50 EMA, and then let's do that. Let's do that another day. So looking at EU here, what I wanted to do is I want to go back to 2016. So what happened in 2016? Well, Trump got elected. The persistence sizer, it's very accurate, I would say. Yeah, I mean, I'm absolutely with you, Alex. It's a major support level from all the way from 2015. Now, I want to show you something else interesting, but this is when Trump got elected in 2016. Okay, where did it put? Yeah, it's amazing. But so where did the bottom actually being? Where did the bottom come in last time Trump got elected? So this is November the 26th. This is where we are right now. And what do we see? Well, we do see a fake out. We do see like a confirmation of a bounce here, and then it comes lower. But where it actually does put in a clear bottom is around inauguration date. So this is the January the 20th. This is inauguration date for Trump. If you go out to the daily, this is what it looks like on the daily. The bottom is clearly being formed after inauguration, with the bottom being the end of December. Okay, so the end of December is when Euro USD is putting in the bottom. This goes against the seasonality pattern, and I think we might go against the seasonality pattern right this year as well. So 2016 and 2024, I think out of the 24 years that this has been tested on, I believe that 2016 and 2024, this year we're in right now, will be anomalies. That will not be part of that statistical seasonality effect, because Trump is giving us something different basically than what we had before. And we already have the divergence between the European Central Bank and the Federal Reserve, is the US Central Bank, right? So, but looking at this, it's quite clear. I mean, EU might not have been put in the bottom. Look at that's the bottom from 2016. Going back to current prices, where are we trading right now? Well, we actually hit that bottom, right? So we actually hit that bottom right there. Do you think war and tariffs imposed will impact euro reversely? What do you mean? What do you mean with reversely? Do you mean that it will weaken the euro? Yes, I absolutely believe that the tariffs that Trump is talking about, he's going to put tariffs on China. He's going to put tariffs on EU. Now he came out and he says he's going to put 25% tariffs on the Canadian dollar and Mexico. So it's like, yeah, it's absolutely going to affect EU. I don't know, like it's going to affect a lot of things, I did put together a quick I think well, right now what's pulling down the EU is the fact that what's pulling down EU, the euro versus the USD, is the fact that the economy in the eurozone is not doing well. France has officially gone below the threshold level for recession, and a lot of other European countries within the eurozone that's using euro as a currency looks like they're following along. So the European Central Bank is pressured to keep rates, to keep rates lower, to make it cheaper to get loans and cheaper to get money, and put some money in a circulation, and hopefully get that economy going. While in the US we have a very strong market, very very strong markets, and that is pushing, putting pressure on inflation. Inflation might go up, and that is going to pressure the Fed to keep rates high. So we have a divergence between these two interest rates in these two areas of the world, which of course brings one currency up and the other currency down. So quite, of course, Trump isn't the only actor, but it's big actor. It's huge. Anyway, so let me give you a quick update here on a quick market update. So first of all, we had a market rally. The Scott Bessent got nominated as the Treasury Secretary, and that, of course, boosted markets quite a lot. But his, and also his tariff-friendly stance could, of course, impact the USD strength. It's also, from what I've seen, a lot of there's pro. He talks a lot about being pro bonds as well. So we'll see what it does. Trump came out earlier today saying that he's proposing a 25% tariff on Canada and Mexico, and that, of course, is going to be affecting the Canadian dollar and the Mexican pesos, I believe that is. So you can definitely expect some strong volatility in those pairs against the United States of America's dollar, the USD. And then we have a couple of key data points this week. We have the PCE inflation data and the FOMC minutes that could very well. It's going to. The PCE inflation data is going to influence the Fed decisions, so that's an important one. And then in the eurozone, inflation is expected to rise to 2.27. So we're seeing inflation is expected to rise in the eurozone, which, considering the situation, not good. And we got Tokyo CPI coming up as well, and then we see also that commodity prices has dropped, and because of the tension in the Middle East is kind of easing a little bit, but then of course the seasonality demand might offer some support for that. So I want to take a quick look at the
Bitcoin.
No, I want to look at MXN versus the US dollar first of all.
Of course.
Is the Mexican pesos versus, no, it's USD. Is it USD MXN, right?
Yeah. Yes.
Okay.
It's an exotic pair, but in this case, since we have fundamental news, it's very interesting.
It is. Looking at the weekly here, we're coming into a previous weekly accumulation zone right here, accumulation distribution, whatever you want to call it, but it's a big zone on the weekly. What does it tell on the daily? Interestingly enough, I think this might be the reload zone as well. Yeah, so we're right inside the reload zone right now. Now, it's obviously in a strong uptrend here. And there might be a trade here on the break of this resistance. So I'm going to be putting an alert here in case we break above that resistance. I do think we have a potential. We do see that we do have quite a good trend here. So if we break above that level, then that could definitely affect. We might see a breakout here to go long. We'll look at USD CAD. Yeah, that is crazy. Okay. So obviously following the the news, we obviously had an insane move to the upside here on USD CAD. I mean, this 4-hour candle alone is almost 200 pips.
That's
So what I would be
insane.
doing, yeah, it is insane. So what I would be doing on USD CAD is we have 2 levels here. Got that one. And then we have this one. I would love to be able to get in below. It also means a retest of the reload zone. Your website not available, market analysis on there. I'm not sure what you mean with that one. Okay, so what I'm looking for is a retest of that level, and because I think this was an overreaction. I mean, this is just a huge move, potential overreaction. So I'm looking for a retest here, and I think, you know, if we might, if the momentum is strong here, we might not come down and test the breakout level. We might find a bottom here on the perhaps the 50% fib. So adding the 50, we see, well, the 50 is actually here. So what I would love to see is like a wick down and then a pin bar. Like that would be my perfect setup. Wick down, hitting the 50, closing as a bullish pin bar on the 4-hour. And I would then go long on USD CAD. Looking at targets, we're going to zoom out, and we do actually have some really good levels here looking at the weekly. So I'm going to be focused on this one right here. We're going to be centering that. Price is currently trading right here. We'll be adding a level here. I need to use the replay function and go to the daily. I think that would be a fairly good profit target. Going back to current price, what would be the risk to reward of a trade like that? Well, the risk to reward would be quite good because I could potentially entering around here with stops wherever that wick is, maybe here. So I think that would be a really good trade. And I might even trade this if we have a breakout like that. But the problem is that wick is quite high. We'll see. What we're getting now, though, is a very clear trend line. And we might have... Well, actually, you know what this is? This is a... descending wedge. No, it's not a wedge. Is it a wedge? No, it is a wedge.
It is a wedge.
Yeah. So a break. So we might get something like this. That's actually a good technical setup right here. Yeah, this actually looks really good. This might actually be tradable.
It looks a very nice continuation pattern. We'll have to wait for price to start on the lower time frame, forms the reversal patterns or break out of that structure for the confirmation. But that's what you want to be doing. You want to, after the market shows its hand, which it did by that huge move, you want to not just buy it blindly, but wait for price to shift again, because now it's consolidating, but you don't know how deep that can turn into a retrace, and you don't know how deep that can go. So you don't want to be just buying because it made a move up. You want to be waiting for price to tell you that it's ready to continue higher.
Okay, guys, so we're coming up to the 2-hour mark here, and I think it's time to do the giveaway. So I'm going to be opening up my giveaway screen right here. It's the what day is it? 26. Okay. News for the dollar in 5 minutes. What's the news? It's what is it at 4? Can't even CD. Why not sell right now? Sell what? We're looking to buy. We're looking to buy USD CAD. Okay, we got consumer confidence.
Maybe it's another asset.
Yeah. So we got consumer confidence coming in 5 minutes. Let's wait for that news, and they're giving people a couple of more minutes to get into the giveaway. So in the pinned comment, we do have the link to the giveaway. You have to go to the pinned comment in the YouTube section, click the link to the giveaway, and then use the secret code DIAMOND to get into the giveaway. We'll be drawing that at the top of the hour. And it would be interesting to see if we might get that breakout on this wedge pattern. USD buy, long term, I'm bullish. I'm bullish the dollar, definitely. So how to participate in the giveaway is you go to the comment section in YouTube. There's a pinned comment in the comment section. Click the link. It's going to ask you for the secret code. The secret code is DIAMOND. Type in DIAMOND. Click OK. You're in. For scalping, no, like, okay, so if you come in here and you ask for signals to scalp, that tells me that you need to work out on a scalping system on your own. Asking me for advice on scalping, that's not going to help you.
You mean signals?
Yeah, I'm not sure what I said there, but yeah, signals.
That's fine.
Okay, let's go to the chart here. We're going to look at USD CAD, see if we can. So the no, I don't have any news on the position size indicator for MT5. What I would say though is that you could check out the position size calculator from Learn Forex. It's the one that we covered during the bootcamp trading week as well. It's a really good one. You can Google position size calculator for MT5, and it's usually going to be the first one that pops up. It's from a site called Learn Forex. Yeah, Earn Forex, that's right. Okay, we got the news coming out shortly. We'll see. What are we...
It's about how many minutes do we have? 1 minute. 1 minute to the news. Consumer confidence coming in. What are your guess on this, Jonatan? I know we don't trade gases, but what do you think? We have a couple of seconds. What is the market likely to do?
The market is yeah, I don't know. I haven't prepared for like, I'm not going to be trading, so I'm not going to I don't know. I don't want to be guessing on that, but I'm guessing that if we see higher numbers. So right now the consensus is slightly higher. So right now the forecast is slightly higher. If it comes down lower than expected, that might drive the USD higher. Should be driving the USD higher.
It's coming out, or it's already out.
It's coming out. It's out right now. It's slightly higher than expected. Like a very, very small number. Higher than expected. And as you can see right here, the first initial reaction on USD CAD is almost nothing, but we are seeing some initial selling pressure coming in, and that's because if the CB consumer confidence would come out and say that it's the confidence in the consumer, whatever, is much higher than expected, that would potentially drive talks of inflation going higher, which would pressure Fed to potentially raise increase rates, which would drive the interest in USD higher. So right now we see that also new home sales comes in lower than expected. New home sales is lower than expected. New home sales month to month is much lower than expected. And this is, of course, driving the price of the USD lower because this is not putting as much pressure on inflation. Now, there is a lot of talks about inflation going up in the US. And this, of course, tells us that it's giving us the sign that there's not as much pressure on inflation going up. Now, going over to the chart here on USD CAD, we can see that we do see a pressure to the downside. If we look at the 1 minute, you can see that very clear where the news came out. Right. Actually, we get sold into the news, and then the news came out right here on that candle. You see that the initial, so this is on the 1 minute, right? So the initial reaction was to the downside. Now, we're still trading around this support level. We're still at that low of the trend line. So this trade setup is very much active, and we see a lot of times that the initial reaction on a news event is the is the fake move. A lot of times you'll see that move get retraced, and this is a very small reaction. So when you have a very small reaction, it usually means that the market is going to continue in whatever direction it were trading in prior to the news. All right, so let's run the giveaway here, okay?
I just noticed that I was muted while trying to say something, but I did a Jonatan right there.
Yeah, you did.
No, I was gonna say when the market doesn't move with news, that means that whatever was priced in was in line with the results, right? Because price needs, when price gaps or move very violently after the release of a news, of course, that's because of it's something surprising. It's different. We didn't know, and it's different than it was priced in. But that now is what now happened is that whatever the expectation was in line with the actual results, or the other way around, the result was in line with the expectation. That's why the price didn't move that much, because there wasn't much surprise to it.
Exactly. All right, let's run the giveaway here. Let's do it. Let's see what we get. Yeah, hopefully you guys are ready. We'll be doing a 120K bootcamp trading account. Let's go. We're gonna be doing the traditional. Right, there we go. Heidi.
Nice. Congratulations, Heidi.
Right. Congratulations. You're the winner of a 20K bootcamp trading account. You will get an email. I'm going to be sending this to the team right now, and hopefully you'll get an email by tomorrow. Those of you who have won last week should have been getting an email today, so make sure that you do check your email inbox. And with that, I would like to thank you all for joining here today, and hopefully I will see you all tomorrow when it's going to be me and Saul for the first hour, and then it's going to be me and Alex for the second hour. I'm thinking I'm going to be scalping. Probably going to be open up my scalping account here on MT5. Probably do a couple of live trade scalping. Hope, because it's been a while, and I feel like getting my heart rate and blood pressure up a couple of notch.
Well, thank you everyone for watching us today. We truly appreciate it. And if you appreciate our efforts in giving you value, giving you market insights, hit that like button. And don't forget, we have a great Discord community, which I will be, well, not every day that will be the case, but today I'll be I'll be talking about the market. So we have a great promotion running, right? You can see that on the screen, of course. That account also gives you, if you're not a member yet of our Discord community, that account will also give you access to our Discord community, where you find more value for your growth as a trader. So don't miss out on these opportunities. Thank you for watching us, and we will be back tomorrow. Well, I will not, but Jonatan will.
Yeah, that's right. All right, guys. Thanks for joining. Take care.
Bye-bye.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.